And our Market Monitor guest this week says the stock market should continue to rally this month and in December. He's calling for the Dow to hit 16,000 by the end of the year and 1,800 on the S&P 500. He's Hank Smith, Chief Investment Officer at Haverford Investments. Mr. Smith, welcome. Good to see you here. How confident are you that the markets will continue to do well?
Well, we're entering a very seasonally favorable period of time. November and December historically have been very good months for the market. We've gotten over a historically unfavorable seasonal period, October and September, in fact, making new highs along the way. But look, what's happening now is confidence and sentiment is improving from years of fear and anxiety. And I think we have a long way to go in that regard.
Yeah, but Hank, what's really going to drive stocks to go that much higher from here?
Well, first of all, fundamentals have been good and continue to be good. Corporate America is the shining star from the recession and financial crisis. Balance sheets are exceptionally strong, flush with cash. Productivity is high. Earnings are good. They continue to beat expectations. And if we can get an economy that picks up a little bit in 2014, I think that's going to fall right to the bottom line with continued good earnings.
Let's move, Hank, to a couple of your stock picks, and let's begin with J.P. Morgan, a bank that has really been operating under a regulatory and legal cloud, continues to do so. Why should I put money into that bank, given its circumstances, and not another?
Right. It's still one of the best managed and highest quality banks in the world, and with tremendous earnings power. And it's amazing how after discussions of 13 billion, 15 billion, the stock is still holding up. That's because investors realize the earnings power this company has. And I think you're getting it at a very attractive valuation right now.
Let's talk a little bit about IBM. You heard our guest earlier in the program saying that despite all of these stock buybacks that it's been doing, that the stock hasn't really benefited from it. And if you look at the chart, here's a stock that was above 200 not too long ago and now at 179. Right. Why do you like it?
Well, look, IBM is about software and services. That's how the company has evolved. And yet the quarterly misses in the past 2-3 quarters have been about the hardware business, which is becoming sequentially less and less important. We think they're going to get through those problems. And we do believe they're going to hit that $20 per share by 2015, which makes this an extraordinarily cheap company. And if you're worried about the market reaching all-time highs, this is a nice stock to buy that is a very high-quality company that's not at its all-time high.
Give me a 30-second pitch for your third stock, United Health.
Well, it's the highest quality of the HMO group. And look, the HMOs are part of the solution. They aren't going to be excluded. That was a fear from last year. And we're very encouraged that the government's hiring their Optum division to fix the software glitches of government.org. And we think this company, too, is very attractively priced with very good growth prospects.
All right, Hank, do you or Haverford own any of these stocks?
We do. The Haverford owns them, and I own them personally along with my immediate family.
Putting your money where your mouth is. Thanks very much, Hank. Appreciate it. Hank Smith, Chief Investment Officer at Haverford Investments. You too.